Hello everyone, welcome into our channel once again. Vutela Technology is here. We will be giving you just a recap on the candlesticks. This is our mini course where you should make sure you take some notes, organize your paper and the pen because you will need this stuff so that whenever you are trading or analyzing, you see you should monitor the type of candlesticks that are appearing on your chart. This will make your work to be very easy because some of the candlesticks they appear at the beginning of the trend and also others appear in the middle of the trend. Others they show you that the trend now has ended, so now the market is ready to change the trend. So for you to master the candlesticks, it will enhance your tradability to be as effective as possible. So stay with us until the end of this video and we'll give you the quality information that you need and the quality information that you deserve. So there are things that will be covered in this video. So you must be able to read the candlesticks types of patterns, know the individual candlestick patterns, what does they all mean. You should know the important principles for candlesticks. Also know how to spot high probability candlestick patterns. Also, you should be able to know how to increase your profits with confirmation factors when you are using all the candlesticks. So, having said that, uh, we, we you should be aware that there are three main types of candlesticks in trading. There are three main types of candlesticks in trading. And the first type we is when we observe the number of the candlesticks. They may be classified in many different types. So we will use the number. We will classify the number by the number of candlesticks. We will also classify the candlesticks by the direction where the market will go after the candlestick pattern disappears. So when we are saying the candlesticks are classified according to the number of candlesticks, there is what you call singles, doubles, and triples. So the type of candlestick patterns they are as follows. If we're saying the number of candlesticks, we mean the singles, doubles, and triples. And also we classify the candlesticks pertaining the direction. So the continuation pattern, they are the same, they go the same direction, or also they show us that the trend will continue if we see this candlestick. If you observe that candlestick, it means the trend is still continue. Or if we see a reversal candlestick, it means that the candlestick or the market will make a U-turn. So the directional candlesticks, there are two. There is a continuation pattern where the 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 same direction will continue if we see that type of a candlestick. You see, but to the directional candlesticks, there is also what we call the reversal candlestick, which means that the market is now making a U-turn, meaning if the market was bullish, now it is going to be bearish. So there are few functions of the candlesticks. First function is that it tells you the market sentiment in the short term. Secondly, it is seen in the middle of the trend. It tells you that the strength or of the market is bigger or the strength of that trend is a little bit smaller. So it also tells us the potential for the reversal point. This is very important because you will never open a trade when the market is now reversing. Keep holding some losses that no, I will hold until the market will come back. No, the market has changed its trend. So you must be able to detect that now the trend is changing, so that you are able uh, to trade with very good consciousness. So also another function of the candlesticks is that it tells us about the manner of retracement. It also tells us the exact entry point, also the exit So, but in this case, I want to emphasize that much because it will solely depend on your strategy. So, if your strategy says you enter at this level of 1, 2, 3 confirmations, you follow your strategy, but make sure that you also consider the chart patterns. So there are many important principles of the candlesticks. Uh, First is that not candlestick signals are created equally. They may look the same, but most of the time, candlesticks are different. Another thing that some need to take note of the wick, as it is important. Also, the body size and the color of the candlesticks. There are candlesticks whereby you observe the wicks. There are candlesticks whereby you observe the body. There are candlesticks whereby you observe the size, and there are candlesticks whereby you observe only the color. So all these things are important. You apply them simultaneously in the market. So if you open the chart will not announce that, hey, today I please observe the wicks only, not the colors. Then today please observe the body size. No, the market will just give you anything at any given time. So you need to be able to detect. No. Now I have to observe the wicks. Now I have to observe the color. Now I have to observe the body size. So the strength of the candlesticks also counts. How do we say that the strength counts? Because the location will solidly inform us exactly that now this candlestick means that the trend is a little bit ending. So we need to learn. You need to learn how to spot the false signals. So this will prevent you as a trader from taking a losing trade. Don't rely on candlesticks alone. You must also have different confirmations. Usually, I prefer at least 3 or 4 confirmations before you enter a trade. So there is also what you call candlestick context. It refers to the location where it appears. It may inform us about the downtrend and uptrend. It may also tell us about the starting of the trend, the middle of the trend. Sometimes it will tell us the end of the trend. So if we say candlestick context, we talk about the exact location where we have detected that particular candlestick. So what comes after the pattern, it helps us, it helps to act as a confirmation of the strength of the candlestick. So the time frame that you are using when you are analyzing and trading, it also counts when you are considering the candlesticks. Because in most cases, if you find that you have analyzed with a bigger time frame and somebody has analyzed with a smaller time frame, so the stronger signal will be that signal of a bigger time frame as opposed to uh, the smaller time frame. So there is also what you call the continuation patterns. The continuation patterns, we have 2 types or 2 examples, which is the 3 black crowns, also the 3 white soldiers. So the principles that are governing the 2 examples of the continuation patterns, I'm talking about candlesticks. It tells you on how you should hold the trade, or it also tells you the entry point so you can scale in. Some they tell you if the trend is starting, that's when it works best, when you are able to detect when the trend is still at the beginning, the trend is still starting. That's the best you can ever do. So there is also what we call the reversal patterns. The reversal patterns, we have many examples. I think they are around 9. We have the Doji, the Hammer, the Hanging Man, the bullish HARAMI, the engulfing pattern. Here, the bullish HARAMI or the engulfing pattern, there may be continuation pattern. Also, the bearish HARAMI or the engulfing pattern too, there may be a continuation pattern also. We have the morning and the evening star. So when we are talking about the morning and the evening star, you need to learn more the psychology behind every pattern, not the names only. Because sometimes if you master the names, you may find yourself losing severely. No. I don't have enough knowledge. Just have confidence. Take the psychology behind everything you speak, and definitely you will make it. So the principles that govern this example is that each candlestick, any of these candlesticks, yeah, the Doji, the Hammer, the Hanging Man, the Bearish Harami, the Morning and Evening Star, they they tell us that there is an end of a trend or near the end of a trend. So some of them they will appear before the trend begins. So we need to confirm, we need a confirmation to spot the true reversals in the market. So there are also temporal confirmations, there are also permanent confirmation. So we should go with what we call the permanent confirmation so we can detect the reversals. So some people they trade the reversals because if the market was bullish and decided to reverse, they also place small sell. If you, for instance, you have very small capital, you place a small sell, you collect few pips, and the market will proceed with the trend. So you must be able to pick the top the tops and bottom, double top, double bottom, something like that, so that you're able to trade the candlestick. So now let's talk about the Doji candlestick. So the Doji candlestick is a signal candlestick pattern, which means the traders they are indecisive. They have equal strength. The traders, I can say they have not yet decided if they buy or they sell. Like you can see my diagram here, it's just it's just a cross here, because the Doji doesn't the Doji candle it doesn't mean anything on its own. You see, but the thing that will give us a meaning is the candle that will follow after the Doji candle. So it is more effective on an uptrend than a downtrend. If you see the Doji candle, it is more effective on an uptrend or a downtrend. If we're saying an uptrend, it means that it has to go where the downtrend has ended. If we see the Doji and also the bullish candlestick, it means it will be an effective buy. So it must appear on a trending market, the ranging market, and the volatile market. So the doji alone can be bearish or bullish signal. So good quality doji, uh, a good quality doji, we see it that the top wick should be the same length with the bottom wick. You see my angle here, my diagram here. This top wick should be the same length as the bottom wick. You don't need even to measure this thing, because if you just observe it with your own eyes, definitely you will see uh, that both the top and the bottom wicks they are the same. So good quality. So the longer the wicks here, if they are longer, it means the signal is gonna be very strong. So take note of that. Take note of that. Another thing, there are doji types. There is what we call the normal doji, the dragonfly, the gravestone. The normal doji is what I've been explaining before. The dragonfly, you will see this a dragonfly at a bearish when the market uh, the trend has been going down, and there at the beginning when the market is now starting to be bullish, this means this is a, if you see this dragonfly fly, a fly goes high, the market is about to go high. If you see this gravestone, the market grave is down under our feet, so the market is ready to go down. So the candlesticks they are very effective. For instance, the bullish hammer pattern or invented upside down, and also the bearish hanging man or shooting star. There is also what you call a spinning top. It is important in a trending market, so it is visible at the end of a trend. So it can be a bullish or bearish. The longer the wick, the better is signal here with the spinning top. So there is also what we call the harami. Harami is it may be bullish and bearish. So this type of candlesticks, the color and the size of the body is important. Remember that when we talk of the hammer, the doji, the spinning tops and the wicks are very important, but the color is not important. But here, if we talk about the harami, the color, it is very, very, very important. So uh, we also have the engulfing candlesticks. So the larger the candlesticks, the stronger the signal. You see. So we here is a bullish candlestick. This is uh, the the short candle is red, and the long one should be green. So if the long candle is bigger than the previous red candle, it means the market is bullish. This is an engulfing candle. After you see the confirmation candlestick this side, you just click a buy. And also, if the candlestick this one is green, this one is red. So the larger the difference, the stronger it is. If this is very large, and also you have to enter the second candle here, the confirmation of a sell. So there is what we call the stars. The stars is the candlesticks that are in between the two candlesticks. So what we call the morning star. That's the first candlestick is red. The second candlestick doesn't matter. We don't observe the color here. Uh, the one on the right should be green and above the midpoint of the red candle here. So here, if we see the morning star in between these candles, it means the market should be bullish. So if we also see the evening star, morning high, evening the sun goes low. So this is very, very crucial and important. Make sure you master it. There is also what we call the evening Doji star, which is a bearish candle. So the first candle is green, meaning the market was bullish, the market is higher, and you see the Doji star. And also the last candle is red, and if you see this candlestick, it means the market is now going to, excuse me, it's now the market going to be bearish. So there is also another candlestick which is called the Doji star, which is bullish, where the first candle is red, and there is this Doji star in between, and also this last candlestick is green. This means that the trend should be bullish. This is a strong signal for bullish if the green candle is longer, a little bit long. Shortly, the bigger the size, the stronger the signal. That's what exactly it means. So there is also what we call the consecutive candles. Three white soldiers. They don't have wicks, as you can see. They may have smaller wicks here and at the bottom, but not on the top. What you call three soldiers. They mean they alert us that this is a bullish market. There is also what you call the black crown soldiers. They they can have they can also have the upper wicks, but here there should be no weeks, not weeks as in the days of the week. W week like this. Sorry, hey, week like this. Weeks, week. See, week like this. WICK. So if we see the three candlesticks at a straight line, like you can see, it means the market is bearish. So all the doji bullish work best at the end of the bearish trend. At the end of the bearish trend, like I've been emphasizing, that observe the market, that now the market is at the lowest level, the lowest level. That's why they say you buy low, you sell high. Even the market is very, very low. Now the Doji will give you the best bullish signals, the best bullish signals. You'll make a lot of money and be happy living an independent free life. So there is also what we call the Tri-star patterns. You see either the bearish trend, so it's a bullish signal, the Tri-star patterns. So that's all about the candlesticks. For more information, for more confirmation, for more and for confirmation, the pattern for the patterns we have a video description below, which we are explaining more about the chart patterns. So please revisit our videos below so that you can be a profitable trader. Thank you so much, guys, for your attention. Please do not forget to like our video, share with your loved ones, and also smash that notification button so that whenever we are posting videos, you'll be the first one to know. Bye bye.